Hey, everybody. There are literally hundreds, if not thousands, of stocks to trade in the stock market. And every week you can be looking around trying to figure out what it is you're going to trade. Well, I'm going to share with you what you can use as a seller to create your watch list for the week. All right, let's get into it. So the first thing I do is go to usepeakbot.com/watch list. This is PeakBot, which is an automated trading platform for selling options. I go here and I utilize their watch list, right? So their watch list, the good thing about it is it gives you the company name. These green ones are lower risk level, and they also tell you the trend. So a bullish trend means you're going to do put credit spreads. Then if you get into the yellows are a moderate risk level. We have a bullish trend. We have neutrals. The neutrals are ones that you can use for iron condors, which is put credit spreads and call credit spreads together. And then you have some that are still moderate risk, but they're bearish, which means you can do call credit spreads. I take all of the ones. If there's enough from just the lower risk level, then I'll only do the lower. But if there's not very many lower risk stocks, which in this case there's only 3, then I will also add in the ones that are of moderate risk. I take all of the stocks that I found on the watch list and I put them in the proper categories, whether that's put credit spreads for those that are bullish, call credit spreads for those that were bearish, and iron condors for those that are neutral. These are all the stocks that are there on the watch list. I'm going to choose one stock off of each of the lists, off the put credit spread, call credit spread, and the iron condor list, and show you the process that I go through to determine the strikes. So I'm starting with Exxon, and since Exxon was on the put credit spread list because it said it was bullish, has a bullish trend, I come to the chart and start to look for support and resistance. All right, support and resistance. I see some support at 114. I also look for the gaps to see where are the areas where price is going to have some extra support. In the midst of this gap, we're also going to have about halfway. I'll mark about the halfway point. The gap here has been filled. I also will look to see what about the resistance that we have. So we see what, if it's bullish, but I want to see how far will it go, or could it potentially go and then reverse. These are the things I'm looking for support and resistance, because I'm trying to determine what would be good strike prices. So what I see is 114.14, 114.97, 116.11. So just in case you don't really know much about charting, you may want to go and check out my startwiththechart.com, which is a free charting webinar that teaches you about support and resistance, candlestick patterns, using indicators, so on and so forth. You might want to go check that out. It's a free webinar, and I'll put the link to it down in the comments. But here we are on Exxon. We've got some supports, 114.97, 114.14, 116.11. Then I go over to the trade screen. I look for the next expiration date, the one that I'm looking for. I put the spread on single. This is Thinkorswim, by the way. That's what I use for my charting platform. And I look on the put credit spread side for a probability out of the money of at least 75%. At least 75%. Looks like here we've got 115 as our strike that has a 78% probability out of the money. So this does correlate with the fact that when I looked at the support, I see 114.97, actually got 116 and 114.97 are both between current price and the 115. So I like 115. It gives us an extra support in the middle. So I would go here and say, okay, 115 is something I like. Then I would go back to the list that I have, the graphic where I have all the stocks listed. And we looked at Exxon, and I go to Exxon and say 114, 115 are the strikes for the put credit spread of Exxon. All right, let's move on to Disney. Let's go look at what Disney has to offer. We're going to go to Disney. Remember, what I do here is I go and look at the charts first. I want to see what is the support. Oh, sorry, Disney is on the call credit spread list because it was showing bearish. So I go to look for resistance in this case. Current price is here. We're looking for resistance, basically places where the price went up and did a reverse. There's one here. There's also one at 88.65. Is there? I don't see any gaps here that we would need to be mindful of. Looking for resistance, places where price went and reversed. Looks like 90.02, 89.17, and 90.02 are the two that are closest. I will also document this gap that I see here. All right, so now that is our resistance. I will also put on the chart what the support is. So even if it's bearish, we see that it may come down. We're close here to a support, boom, right? It could 85.14. We would see there that it could go a little lower. Let's see what other... I've taken us back a little further on the chart so we can see what happened in the prior times. And it looks like back in November there was a gap that was created. Looks like it was an earnings gap. Now the price action, the recent price action has filled it, which is why you now see there a bounce happening here. So you do want to know what is your resistance here, and these long wicks let you know that price is trying to go on back up. So you want to say what are strikes up here that I don't think price will come back up to as it continues to climb. I've got 89.17 and 90.02. Then I go back to the option chain and I'm looking for a call credit spread because this is a bearish move. Call credit spread, I'm looking for over 75% probability out of the money. Looks like the 189 strike has an 82% probability out of the money. That correlates with what I find on the chart. With what I found on the chart is 89. We can go with that. So I go back to my graphic here, and for Disney, I will put in 89.90 as the call credit spread numbers. Now you can always widen these spreads if you want. You don't have to make it a one spread. You can widen the spreads if you'd like. I usually just tend to stick with one spread if I'm doing it myself. That's just a personal preference. Personal preference. If you widen the spread, it gives you a little more room at the sell leg, just in case the price starts to come into it and it starts to breach. You have a little more room there. All right. So looking at the Iron Condor list, let's see. Do we like Morgan Stanley or Oracle or Pfizer? We did Exxon. Oracle would be in tech. Let's go with Oracle. Let's go look at Oracle. Looking at Oracle, again, I see there was a gap created back from earnings back in June. We can highlight this area here. There was an earnings gap. Price hasn't fully filled this gap. It looks like there is some of the parts are still left, or there's a little bit of room here. If we were to look, there's some here. I'm going to change this up so we can see the difference. Okay, I put the gap so that way so we were able to see them. Now this is the gap, the remainder of this gap from earnings back in June. There is a portion of the gap here that still remains to be filled, and there is a bit here, just a little bit still remains to be filled. And we also have another gap that was created by this move, and it needs to be filled as well. Left a little bit of this gap to fill again. So now these multiple gaps all put together make it a little bit more, I won't say difficult, just gives us a little more that we have to work with. Okay, so let's move this to some resistance. We're looking here, Oracle, for an Iron Condor because it showed as neutral for the moving average. It has a neutral trend, which means we can go with a call credit spread and a put credit spread. So we're looking for support and resistance. I'm going to put some resistance up here at the top of this gap. Honestly, the bottom of the gap and the top of this gap is also going to play resistance for where we are. Halfway through this gap, if we would, I'm just eyeballing it, but about halfway through this gap is also going to provide some support or resistance. And then the bottom of this gap is going to provide support. Now, this lets us know that really on our outer bounds, we can look up at 137 if we'd like. About halfway through that gap is 135.99 or 136. We can look at 134. So we've got the resistance on the top and we've got support on the bottom. All right. I'm going to go to the option chain and look at it from the puts credit spread and the call credit spread side. Remember, we're looking for at least 77% probability out of the money, 75%. We're looking for at least 75% probability out of the money. 128 is what I see for the support area. 128 puts us right up in this area here where there has been some slowdown, drop, yep, 128 would be there. That goes along with that. And we're going to also look on the call credit spread side. We look for 136. It's at least an 80% probability out of the money. What did I say? 136. 136 puts us above two of these resistance places. So now I said 136 is on the call credit spread side. Okay, so what I see is 127, 128 on the put credit spread side and 136, 137 on the call credit spread side. So I add those to the graphic. Now I do this for all of these stocks. I go look at the chart. I go see support and resistance depending on what the trend shows, and I put in the numbers to go along with these. Then what I do, generally I go back to the chart and I will look at the charts, putting myself as for example, I would use Oracle. And this support, I would say, okay, at this support 128, I would turn on an alert that says when it gets to this place in the alert at or below 128.01, this would be a put credit spread entry. This way, that lets me know when price is coming towards these strikes. That way I'll get the best premiums when I enter these trades. Entering at support, entering at resistance is going to guarantee better premiums. It's going to guarantee better premiums. All right. Well, hey, if you're finding that credit spreads are something that you really like, but you want to know more about them, I have created a credit spreads masterclass that includes everything from what are credit spreads, how do we enter them, how do we find them, how do we find the stocks, how do we find the strikes, how do we close them, how do we defend. Basically, everything is in there. It's a masterclass you can get as a training at our website, educatortotrader.com. The link should be down in the comments. Go over there and grab your immediate access.